Advanced Micro Devices, or AMD, has evolved from a traditional CPU challenger into one of the most important competitors in the AI semiconductor industry. The company now competes across data center CPUs, AI accelerators, networking, gaming, and enterprise computing. Heading into 2026-2027, AMD's biggest opportunity is its expanding AI business, particularly its Instinct GPU lineup and next-generation Helios AI systems. The main investment question is whether AMD can capture enough AI market share to justify its premium valuation. The AMD bull case is built around three major growth engines: AI accelerators, EPYC server CPUs, and a broader data center ecosystem. AMD can provide customers with CPUs, GPUs, networking, and software rather than competing only on individual chips. If hyperscalers and major AI companies continue adopting AMD hardware, the company could experience another major acceleration in revenue and earnings during 2026 and 2027. AMD entered 2026 with a strong financial foundation. The company generated approximately $34.6 billion of revenue in 2025, representing roughly 34% year-over-year growth. Data center revenue reached approximately $16.6 billion, while client and gaming revenue reached about $14.6 billion. AMD also generated approximately $4.3 billion in GAAP net income, demonstrating that its growth story is increasingly supported by real profitability rather than simply future expectations. AMD's 2026 results have shown a significant acceleration. First quarter revenue reached approximately $10.3 billion, while second quarter revenue climbed to roughly $11.5 billion, representing about 50% year-over-year growth. The most impressive number was data center revenue, which reached approximately $6.7 billion in second quarter. This shows that AI and data center demand are becoming the dominant drivers of AMD's financial performance. AMD guided for approximately $13 billion of revenue in third quarter 2026, with non-GAAP gross margin around 56%. This guidance demonstrates strong demand for AMD's products. However, investors should remember that AMD's stock price already reflects extremely high expectations. Even strong earnings can result in a stock decline if investors expected something even better. This makes forward guidance and execution extremely important for AMD shareholders. Artificial intelligence is now the centerpiece of AMD's long-term growth story. Hyperscalers, cloud providers, and enterprises are investing enormous amounts of money in AI infrastructure, creating a rapidly expanding market for GPUs, CPUs, and networking equipment. AMD does not need to completely replace NVIDIA to benefit. Even capturing a meaningful portion of the growing AI accelerator market could generate tens of billions of dollars in additional revenue over time. One of the biggest catalysts for AMD is its next-generation MI450 AI platform and Helios rack-scale system. AMD is moving beyond individual AI chips toward complete computing systems that combine GPUs, CPUs, and networking. If Helios gains strong adoption among hyperscalers and AI companies, AMD could experience another major step-up in data center revenue during 2027. Successful execution here could significantly strengthen AMD's position against NVIDIA. AMD is also expanding its relationships with major AI companies. Microsoft has announced plans involving AMD's next-generation Instinct and EPYC technologies, while Anthropic has announced a strategic partnership involving up to 2 gigawatts of AMD Instinct MI450 GPUs. These relationships are important because major deployments provide revenue, technology validation, and opportunities for additional orders. Continued adoption by large AI customers could become one of AMD's strongest long-term catalysts. While AI receives most of the attention, AMD's EPYC server CPU business remains a major competitive advantage. AMD has steadily gained server market share against Intel and continues developing increasingly powerful EPYC processors. The upcoming Venice generation, based on advanced manufacturing technology, could further strengthen AMD's position in cloud and enterprise computing. The combination of EPYC CPUs and Instinct AI accelerators gives AMD a powerful data center portfolio. AMD's client and gaming business remains another important source of revenue. Ryzen processors have helped AMD compete effectively in PCs, while Radeon graphics and semi-custom gaming products provide additional opportunities. However, these markets are more cyclical than AI infrastructure. Therefore, I view client and gaming as supporting growth engines, while data center and AI remain the primary drivers of AMD's 2026-2027 investment thesis. My base case model estimates approximately $49 to $51 billion of revenue for 2026 and roughly $72 to $78 billion for 2027. That would represent another major expansion from AMD's $34.6 billion revenue base in 2025. The key assumption behind this forecast is continued data center growth supported by MI450, Helios, and EPYC. If AI demand remains exceptionally strong, AMD could potentially exceed these estimates. AMD's earnings could grow faster than revenue if the company continues improving gross margins and increasing the percentage of high-value data center products in its sales mix. My base case estimates approximately $7.0 to $7.5 of non-GAAP EPS for 2026 and approximately $11.5 to $14 of EPS for 2027. If AMD reaches the upper end of those numbers, the current valuation becomes much easier to justify. Gross margin is one of the most important metrics investors should monitor. AMD's profitability has improved as its product mix has shifted toward higher-value data center products. Management's third quarter 2026 guidance of approximately 56% non-GAAP gross margin suggests further improvement. If AMD can sustain margins in the high 50% range while revenue continues growing rapidly, earnings and free cash flow could increase substantially. AMD's cash generation profile has strengthened considerably. The company has billions of dollars of cash and investments and has been producing increasing amounts of free cash flow. This gives AMD financial flexibility to invest in research and development, manufacturing capacity, AI infrastructure, and strategic opportunities. However, investors should also monitor AMD's increasing financing needs as the company scales its AI business. Using a discounted cash flow framework with strong revenue growth, expanding margins, a roughly 9% discount rate, and approximately 4% long-term growth. My estimated fair value range is around $450 to $600 per share, with a midpoint near $525. This suggests that around the current price level, AMD is closer to fairly valued than deeply undervalued. The stock therefore requires continued strong execution to generate significant additional upside. For 2026, my bear case target is approximately $375 to $425 if AI growth slows, margins disappoint, or valuation multiples contract. My base case target is approximately $525 to $600 if AMD delivers strong data center growth and maintains its AI momentum. In a highly optimistic scenario where MI450 and Helios significantly exceed expectations, AMD could potentially reach $700 to $850. For 2027, my bear case range is approximately $400 to $500, while my base case range is around $650 to $800. The bull case is approximately $900 to $1,100 if AMD becomes a major second source for AI infrastructure, successfully scales Helios, and achieves substantially higher earnings. The $1,000 plus dollar scenario is possible, but it requires both exceptional earnings growth and a premium valuation multiple. NVIDIA remains the clear leader in AI accelerators with major advantages in CUDA, software, networking, and ecosystem depth. AMD, however, has an opportunity to become the strongest alternative platform. AMD's advantage is its combination of EPYC CPUs, Instinct GPUs, networking, and complete AI systems. If customers increasingly want a second supplier for AI infrastructure, AMD could capture a significant share of this enormous market. The biggest risk is competition from NVIDIA. AMD also faces risks from AI spending cycles, export restrictions, manufacturing capacity, advanced packaging constraints, customer concentration, and valuation compression. China-related restrictions could limit AMD's addressable market, while supply constraints could prevent the company from fully satisfying demand. Most importantly, if AMD's AI growth slows substantially, the stock could fall even if the underlying business remains healthy. At approximately $514, a 2x would mean roughly $1,028 per share. To reach that level sustainably, AMD would probably need to generate dramatically higher revenue and earnings, potentially approaching or exceeding $80 billion of annual revenue and reaching approximately $15 or more in EPS. AMD would also need significant AI accelerator market share gains and continued investor willingness to pay a premium multiple. The bull case is that AMD becomes the dominant alternative to NVIDIA in AI infrastructure. MI 450 and Helios could see rapid adoption, data center revenue could continue accelerating, EPYC could keep gaining server share, and gross margins could expand. Under this scenario, AMD could reach $900 to $1,100 or potentially higher over time. The critical factor would be whether AMD can convert its technological progress into large-scale customer deployments. The bear case is that NVIDIA maintains overwhelming dominance, AMD's AI products fail to gain enough market share, and hyperscaler spending eventually slows. If revenue growth falls sharply and valuation multiples compress, AMD could trade back toward the $375 to $500 range. Importantly, this could happen even without AMD experiencing a major business failure, because high-growth stocks can decline when expectations become too high. For investors with a long-term horizon and high tolerance for volatility, AMD remains one of the most attractive AI semiconductor growth opportunities outside NVIDIA. However, at an elevated valuation, I would prefer buying during meaningful pullbacks rather than chasing sharp rallies. The company's fundamentals are highly attractive, but the stock already prices in substantial future success. AMD enters 2026-2027 with powerful momentum across AI, data center, and server CPUs. My base case forecast is approximately $49 to $51 billion of revenue in 2026 and $72 to $78 billion in 2027, with 2027 EPS potentially reaching $11.5 to $14. My base case price target is $525 to $600 for 2026 and $650 to $800 for 2027, while the bull case reaches approximately $900 to $1,100. Overall, AMD is a high-quality, high-growth AI semiconductor company, but not a low-risk bargain at current valuation levels. The AMD story ultimately comes down to one question: can AMD capture a meaningful share of the massive AI infrastructure market while simultaneously expanding margins and earnings? If MI 450, Helios, and EPYC execute successfully, AMD could remain one of the strongest semiconductor growth stories through 2027. But because expectations are already high, investors should focus closely on data center growth, AI customer deployments, gross margins, EPS growth, and valuation before making an investment decision.